Hello and welcome to Dialogue. 28 years have passed since Hong Kong returned to China in 1997. Since then, Hong Kong has been thriving as a city of culture, tech, and innovation, faithfully implementing the principle of one country, two systems. For one thing, the city now boasts the largest IPO market worldwide in the first half of this year. How is Hong Kong evolving amid global shifts and regional integration? What draws people to its markets, and what new engines like digital finance, tourism, and research are powering the next chapter of its story? Join us for our discussion today, live from Beijing. I'm Xu Qinduo. Joining me today are Professor Gong from the University of International Business and Economics, Professor Witman Hung, Director of the Greater Bay Area Research Center of the China Silk Road iValley Research Institute, and Mike Rowse, former Director General of InvestHK, and Clare Pearson, International Development Director for Asia of DLA Piper. Well, welcome to the show. I will start with Witman. If you look at Hong Kong now, we know that Hong Kong has been in the news, especially in recent days. The stock market, its performance in particular, it demonstrates seems to me, a strong comeback of Hong Kong. Is that the case?
Yes, if you look at the IPO market, obviously it's booming. And I just mentioned in the area of the Web3, the new digital asset, there is a lot of, outside parties wanting to come to Hong Kong, apply for the licenses. We are also seeing a surge in the trade numbers. Obviously, there's still the geopolitics going on. There's still this tariff negotiation. But if you look at just the numbers of the first half year, all the numbers are going up, including the GDP, the export, and the IPO numbers. And I'm also aware that there's actually a large number of companies lining up for going IPO later this year.
John, a number of companies are lining up for IPO in Hong Kong. What draws them to Hong Kong market?
Well, I think primarily Hong Kong is still very much a place where there is a big supply of capital. So, these IPOs can be essentially supported by investor interest. But I think there's another quite interesting reason that has to do with that Chinese companies become increasingly difficult to be listed on the New York Stock Exchange and NASDAQ in the United States. Essentially, Washington is adopting a decoupling strategy, even with respect to the financial market. So I think many venture capital investments are looking for exits. Are looking at the Hong Kong as a very possible and viable option, and I think it's a good option essentially. That the regulation of the market is not subject to too much political meddling here. Hong Kong remains to be a very neutral and hands-off, government regulatory policy, and I think this kind of environment is very conducive to continued IPOs, raising capital, and also delivering good and satisfactory returns to investors.
Mike, you have rich experience in terms of attracting, obviously, investment in Hong Kong. You as the former director of Invest Hong Kong. Tell us your observation. Are we, witnessing a strong comeback in terms of investing in Hong Kong?
Well, yes and no. Hong Kong's never really gone away. We set up Invest Hong Kong in July 2000, and quite right, I ran it for 8.5 years, and throughout, Hong Kong's underlying strengths continue to be attractive to multinationals and, of course, mainland companies as well. So international companies come here partly to access the mainland market, and mainland companies come here to use it as a springboard out to the rest of the world. And what makes Hong Kong attractive to those two different parties, of course, brings them together as well.
What about this, earlier Professor Gong mentioned about the U.S. factor. We know that the rivalry or the U.S. competition with China at earlier stage, let's say, back in 2017, 2018, it hurt also Hong Kong. Remember the U.S. Restricting measures, against not only, the mainland business, but also business with Hong Kong. But now it seems like it's driving some of the U.S. investment even to Hong Kong.
If I could understand the thinking of the Americans, I'd be a very rich man and a very clever man, but I'm neither. Yes, certainly it seems to be US policy at one time to use Hong Kong as an entry point in which to undermine China and to make us less attractive and treating Hong Kong in some negative ways the same as it was already treating the mainland. I don't really follow that. Hong Kong has got to be the most internationally minded place and very, very open to American companies who have always been welcome here, and American individuals always welcome here. American businessmen always welcome here. So that was all on them. It wasn't anything we were doing. If they're now helping us, whether they mean to or not, that's okay too. We welcome them. Mm-hmm. And yes, if companies are struggling to raise capital or not feeling welcome in New York, then by all means, Hong Kong's doors are always open.
Yeah, well, what about this, uncertainty created by the U.S. policies like tariff and also probably the weak U.S. dollar? So are that also driving some of the U.S. investment to reduce the exposure probably to the U.S. market?
I think in the last few months, the U.S. dollar has become much less attractive. It seems to be the policy to talk it down, but I think it's the uncertainty. When you go to bed at night in Hong Kong, you think the economic policy is one way. You wake up in the morning and it's something completely different. Not us upsetting things, but because Washington's sending different signals. And it's the same. You think in the morning you understand it. After lunch you don't understand it. So that is definitely uncertainty on a global scale, on a very big scale. And if businessmen can't operate in that sort of environment, they need certainty. If you're investing today, it's because you're hoping to have a return in 2027, 2028, and in the 30s. You can't function properly or make calculated risk with reasonable certainty when there's so much uncertainty in the geopolitical environment. So Hong Kong scores, I think, for its equilibrium.
Mm-hmm. Witman speak of the certainty of stability, given this close relationship on integration between Hong Kong economy and that of the mainland, in particular, the Greater Bay Area. I mean, if you look at this strong sentiment since late last year, for example, the DeepSeek and the likes emerging in the mainland, of course, that kind of tech companies or tech innovation does give a strong, a boost to the performance of the Hong Kong market. Is that the case?
Yes. There's actually the Hong Kong Stock Exchange introduced a new scheme called Chapter 18C, specifically aiming at some of these very high-speed growing companies that are not yet profitable or even without revenue. So this also attracted a lot of these startups, like the ones that you just mentioned. Some of these AI and robotic companies. They come in Hong Kong and lining up because this is a new scheme. Traditionally you need 3 years profit, right, to go IPO. But this one, you don't even need revenue if you're above a certain size and meet certain criteria. So this is very attractive to some of these companies. Another thing that Mike just mentioned, which is also very hot, is we're seeing a lot of mainland mid-sized tech companies coming to Hong Kong with the aim to go to the Belt and Road countries, especially the ASEAN countries. So what they come to Hong Kong is they restructure their corporate structure. They try to internationalize their application and their product, make it more international, and then they use the Hong Kong arm as their international center to go to places like Malaysia, Indonesia, Thailand. And that has become quite popular because I'm in this area, so I'm seeing this kind of company almost on a weekly basis. They come and inquire about how should they set up in Hong Kong, how they hire people in Hong Kong, how do they raise a little bit of venture capital and then go to those ASEAN markets.
As I said earlier, Hong Kong is not only a window to the mainland economy, but also a gateway, let's say, to the outside world. Claire, welcome to the show. According to Reuters report, a record $90 billion of cash from the mainland has driven a stellar 21% rally in Hong Kong stocks in the first half of 2025. Of course, that shows the integration of the economies and how much, let's say, positive influence Hong Kong could enjoy from, say, the mainland growing mainland economy.
Xu Xindor, very happy to be here. Yeah, I completely agree. I think that really there's a complete change in climate in the whole region. It's an investment-friendly period, and really you've got the policy, you've got the people, and also the potential, I would say. I've noticed that the Hang Seng Index is doing very well, and DLA Piper, the law firm, has been very busy because the IPO activity is high. If we just look at GDP growth in the first and second quarter in China, it's been around about 5% compared to 2.7 in the US or 0.7 in the UK. So to be honest, it's a healthy environment, and this has a knock-on on confidence. And it's really the confluence of policy. The policy is friendly towards working with China. And Hong Kong, Hong Kong didn't really become China. China became Hong Kong in terms of dynamism and potential. And we feel that clients are moving there because of the increased confidence. But also, just as your previous speaker was saying, it's really a jumping off point for the rest of the world. People are going to Hong Kong to access the whole Belt and Road. Last time I was there at the Hong Kong Convention Centre, there was a huge BRI summit, Belt and Road Initiative summit. So people aren't just accessing the Chinese market from Hong Kong, they're accessing the whole potential of the Belt and Road. And that's what I feel is catalysing the opportunities in the IPO market in Hong Kong at the moment.
John, you want to jump in?
Well, I think it's more than just the capital from mainland that is propping up the Hang Seng Index in Hong Kong right now. There's also a fair amount of capital coming from overseas into the Hong Kong market. I think starting from the beginning of this year, the narrative of China has entirely changed. It's becoming a booming economy, the innovations taking place, and foreign capital wants to take a piece of this growth opportunities. And obviously, a lot of emerging markets focused funds, they have to do some allocation, and they view China story as emerging again as a viable investment option. And the Hong Kong stock market is the easiest way to take a piece of that opportunity. So I think clearly there's an infusion of capital from overseas into the Hong Kong market, driving the growth, driven very much by these emerging market focused investment funds in the United States and Europe.
Yeah, this is a global city, as we said. John, also, Hong Kong is currently the world's largest offshore RMB business hub, the hub for the Chinese yuan currency, handling approximately 80% of global offshore RMB payment amounts. How do you see this role in terms of, let's say, internationalization of RMB? In particular, we're talking about like Belt and Road.
You're absolutely right. This has a lot to do with internationalization of the China's currency, RMB. RMB has an offshore market. It's a market consisting of local markets in Hong Kong, in Singapore, and I think also in London as well. But by and large, Hong Kong is the largest market. Yeah. So together with offshore market, there's offshore RMB denominated bond market, for example, right? And there are banks opening accounts denominated in RMB in Hong Kong, and there are also foreign governments holding RMB denominated assets as a investment vehicle, as a sovereign fund investment vehicle. So all of these things are happening. So obviously, Hong Kong being the largest offshore RMB market is definitely taking the bulk of the business related to RMB. There are many banks in Hong Kong offering RMB related banking services. So a lot of people in Hong Kong actually have a account with a bank that is denominated in RMB. So I think as the RMB's internationalization process continues to grow, it's sort of natural to see Hong Kong playing an ever more important role for RMB in the overseas market. And also, let me make a point. This also has to do with President Trump's policy. Now, he seems to be very much obsessed with the idea that the dollar has to be dominating, right? But this is actually not necessarily always in the national interest of America, because we all understand, because of the dominance of the dollar, dollar is grossly overvalued, right? And this actually hurts American exports competitiveness. And this is what's described as the Triffin dilemma here, right? And so with a percentage of the global currency being occupied by other currencies, including RMB, it's actually is in the interest of the United States, in my view, to see a bigger share of RMB international markets. President Trump wants a weaker dollar. And this is actually a good opportunity.
Mike, how do you look at this, Hong Kong being the largest offshore RMB business hub? What does it mean to Hong Kong, too, as the handler of RMB here?
Whether it's the RMB play or the IPO or business generally, the biggest plus for Hong Kong is unquestionably our legal system. We ask foreign companies or external companies every year as a practice, what is it that you found attractive about Hong Kong? And the number one factor every year in every survey was the legal system. The common law legal system, we understand it, we're comfortable with it, we know where it's at. And what was interesting to me when President Xi came here for the 25th anniversary of the return of Hong Kong to the mainland, in his speech he mentioned Hong Kong, one country, two systems, of course, that you are valuable to the nation because of the differences, and the key difference is the legal system. And he twice mentioned the common law system, which I thought was particularly striking in a speech coming from the president of China.
Yes, and probably because of that, Witman,
he saw this as a big plus.
As a big plus, maybe just because of that, Hong Kong is also is the place, or one of the first places in the world to regulate, digital assets like crypto, fiat-based stable coins. And now the city is letting companies test new stable coin projects in the regulatory sandbox. Witman, tell us more on that.
Yeah, the law has just been passed. It's not effective yet. It's actually will go effective on the 1st of August. Okay, but you're hearing a lot of news because law's been passed and a lot of people already coming. You see like Standard Chartered Bank with Animoca brands. You see Jingdong and Alibaba, all these players. They're different usage of stablecoin. Obviously, in the area of like Jingdong is more in the retail. It could go well as a internal supply chain credit, as well as a settlement, current or not currency, but settlement tools. In terms of some others, they use it for international trade. They use it for other things. I mean, obviously, the regulatory right now, the framework state very clearly that the stablecoin is a means of settlement. It's not a investment vehicle. But there are people who are being very innovative and also trying to make it more investment friendly. But all in all, this is I think, the first place in the world that actually have a full regulatory framework for stablecoin. I mean, some of the others that is already very popular today, you thought they are regulated, but they're actually not. Okay, but what is more important is Hong Kong is just issued their second manifesto of the Web3, basically saying that we welcome Web3. We already created maybe about 70 to 80% of the regulatory framework, including stablecoin exchange and others. But there's two more laws to be passed, which is on the OTC trade and also on custodian. Once that is done, we will be the only jurisdiction in the world that have a very comprehensive, or in certain sense, complete regulatory framework for digital assets, crypto, and all those. Okay, not some of the other jurisdictions, they have certain regulatory, like Singapore had a little bit, Dubai had a little bit, America had a little bit, but none of them are comprehensive and complete. And sometimes they have contradictions with their own other laws. Whereas in Hong Kong, we did it slowly, we did it in 3 years, but the laws are now almost everything is in place, and it's attracting a lot of not just investment people, but also people who want to utilize this as a new means of finance.
Means of finance.
The digital asset is the new finance. And
right.
You can see also the banks are trying to get involved. In the past, the banks don't get involved, but now they are.
The Hong Kong, again, playing the role in the frontier for this new financial means or new financial practice. Claire, earlier you mentioned about this, China's overall economic performance or the confidence in the Chinese economy, also related to or lead to partially the strong performance of the Hong Kong economy, of the Hong Kong market. When it comes to tourism, again, we are seeing strong, return or recovery, rather, of the tourism. I mean, people are visiting Hong Kong, the tourist arrivals are increasing sharply. So what do you make of that?
Yeah, I think they want to sort of see the new Hong Kong, the post-COVID Hong Kong, sort of after the travel hiatus of the last 5 to 6 years. There's a lot of pent-up demand. And when people are coming in from the US, Europe, Middle East, Africa, Latin America, they often like to start off in Hong Kong because they're comfortable there linguistically. And everyone can get what they want in Hong Kong. It's a true gem of multiculturalism, not just multiculturalism because of the confluence of the 23 Chinese provinces that are represented in Hong Kong, but of the multiculturalism that enables all cultures to feel comfortable in that environment. And I feel like Hong Kong is really reinvigorated by what's going on in the Chinese economy. I mean, obviously, mainland China and Hong Kong are completely complementary. And I feel GBA now is really driving a lot of growth in China. There's no doubt that people are visiting in large numbers, but they want, Xiaohui bi Dahui Hao. People want small meetings, small focused meetings on joint venture opportunities with Shenzhen Tech in Hong Kong, often bringing foreign finance with them. We've got a US group coming, we've got a European group. And today I actually met with some people from Fudan and Polytech in Hong Kong. And of course, they're now running EMBA courses to teach the Chinese model of financial multiculturalism to people from the UK. So I think there's something really interesting going on at a grassroots financial education level in sort of the new financial world order that is represented by Hong Kong GBA. So I see some very exciting new opportunities. The tourism is back, but they're not just going to Fortnum and Masons and Marks and Spencers. They're popping over to GBA. They're landing in Hong Kong. They're getting over their jet lag in 3 days, and then they take the 15-minute train or the 800 renminbi DD. They get the comfortable car over to Shenzhen. And then they're looking for investment opportunities. So yes, they're tourists, but they're very well-heeled tourists. people talk about, Hong Kong's open. Not at all. I was looking at the billionaire index today on Forbes. I see Hong Kong is at 72, second only to New York at 120, London's at 71. Who are those billionaires? They're people who are leveraging the ecosystem that is tech plus easy international finance in Hong Kong. There are people like Justin Sun. The billionaires in Hong Kong used to be the real estate guys like Li Ka-shing. But now you're getting the tech bros who aren't confined to Silicon Valley. They're really present in Silicon Valley, Shenzhen. I saw one friend who left Beijing about 15 years ago to go and work for a tech company in Shenzhen. He now has at least 35 investors visiting him from around the world every year to look at his factory. He went from 5 people 15 years ago to a factory which now hosts 500 global investors every year to visit it. And a lot of the money initially used to come in from Japan, but now increasingly it comes in from Hong Kong because there's different funds which are there to facilitate the scale of those companies. I had a very exciting time. I think a lot of people in the world don't really know about this. I know about it because I'm sitting in a law firm where the IPO lawyers, they work from 7 a.m. to 11 p.m. because there's 80 IPOs a year in Hong Kong. So it's extremely good for the service sector. It's extremely good for the financial industry. Another thing people say is that, the foreigners left Hong Kong. Not true. The people who are long-term expats embedded in the financial global ecosystem between New York, London, and Hong Kong, and now GBA, they've gone nowhere. They've grown in global sagacity of local empowerment. And that combination of the two, you've got really top-class bankers are in Hong Kong, and none of them are parochial.
Right. Let me turn to Mike. Mike, you were the first senior British official to renounce your UK citizenship and become a Chinese citizen. Did you face any backlash at the time for that? And now, nearly 3 decades later, how do you feel about the decision?
Well, I've always been very comfortable. I first found out that it was possible for non-Chinese to become Chinese in 1986, and a first visit to Beijing when I met Lu Ping and State Councillor Ji Pangfei. And I took that idea with me back to Hong Kong and molded over. And then with the handover, with the excitement of setting up the new department, Invest Hong Kong, it just seemed to be a natural development. I didn't find any backlash from Westerners. I think a lot of my local colleagues were very surprised, that it was possible, because they all thought that it wasn't possible.
Seems we lost the signal there. So John, obviously, in the evolvement of Hong Kong, over the past, let's say, since 1997, 28 years. Currently, why Hong Kong is in the focus, partly due to its strong performance of the economy, of the market forces, of the GDP, of export, etc. That says a lot. With that, we come to the end for today's show. Many thanks to our guests. You can also watch us on the CGTN app or on YouTube. Thank you for being with us. I'm Xu Qinduo. See you next time.